Mixed signals. That's how I would describe the current price action in silver and gold. Let's look at the charts. This is silver and gold in the daily time frame. Let's expand the silver chart and we'll start with Friday's action. This was a bigger pullback than I was expecting on Friday, and it was quite impulsive to the downside. If we zoom in on this price action, notice that price closed almost at the very bottom of that price bar, which indicates that buyers didn't come in at the end of the session, buyers didn't come in and push price back up. Also notice that impulsive move pushed silver down below its 50-day moving average. And so that was more of a pullback than I was expecting on Friday. Constructive action last night and continuing in today's session. We've got price finding support, or appearing to find support along this is the lower median line of this shift pitchfork, and of course price bumping into the 50-day moving average, which now is resistance. Support on the way down, although it didn't provide support in this case, and then resistance on the way back up. So a little bit scary action on Friday, but constructive action today. Silver's still hinting at the idea that it's in a new uptrend. Low, high, higher low, higher high, potentially a higher low. So technical uptrend potentially in place here. MACD still in bull mode, trying to give us a sell signal, but I don't think we don't quite have it yet. So no buy signal there. Energy turning up a little bit based on stochastics. Let's look at gold. So gold has been below its 50-day moving average. Again, Friday, large move down. We did get buying come in towards the end of the session, and it appears that gold, at least for now, has formed a double bottom. We might even talk about a triple bottom, but potentially a bottom at this level, albeit MACD in bear mode and a new sell signal based on MACD. So, and this is part of the mixed signals. We've got silver hinting at a new uptrend and gold just kind of bopping sideways. Let's continue this. We've been watching this chart showing what was our technical downtrend. Potentially we'll be changing this to a technical uptrend. The red labels show the series of lower high, lower low, etc. And then in blue, we've got higher low, higher high, and potentially finding support here and heading back higher. Last time we looked at this chart, I drew this channel, which appears to be acting as a channel. It's still tentative. If we get a price bounce from here, we'll have more confirmation that this is a valid channel. Notice that price is finding support along the top of this simple trend line. This just trend line along these price peaks, and here's price finding support there, which is not surprising. Again, resistance to the upside, support to the downside. Keep rolling, 3 fans. So we got our third fan. There's our big impulsive move on Friday, and now a bounce, potentially a bounce at this lower median line. This is kind of what I would expect for silver going forward for some, maybe a couple of weeks. Just kind of sideways, hopefully holding support along this median line, and then eventually a break higher through that third fan. There's a number of factors currently affecting the prices of silver and gold. Some of this data came to light last week or got into the headlines last week. Inflation is clearly heading higher. Gasoline prices are heading higher. I've got any number of charts to share that show where inflation is at and where inflation is heading, where we will see inflation showing up in the next couple of months. Unfortunately, through late summer, early fall, we're going to continue seeing, in my opinion, we will continue seeing high inflation and rising inflation. We're not done with inflation by any means, which means, and this is one of the things I believe came to light last week, or an awareness of, the Fed's not going to cut interest rates in 2026. There aren't going to be any rate cuts. And so I think traders last week were starting to adjust to that idea. Surging yields, interest rates on U.S. Treasuries, particularly on the long end, 10-year and 30-year, which again says no rate cuts in 2026. Stronger dollar, it's all relative, perhaps stronger than all the other fiat currencies. We'll look at the chart and I'll show you why I've got question marks there. India, they doubled, I think, import tariffs on both silver and gold. Modi asked the citizens to stop buying physical gold, which of course they're not going to do, and then uncertainty about what's going on in the Middle East. And so we've got all these factors that are affecting silver and gold after they had that big, we had $118 silver in late January, and then a big plunge, nearly cut in half. I think we got down to 63 or 64, which, almost half. And so vulnerable markets being affected by these. Let's just run through the rest of these charts quickly. This is the U.S. inflation rate. This is where we're at currently. Notice that the line, the price, is poking up above this prior peak from, that was mid-23. What I'm showing in these blue boxes, this was back in the 2020 to late 23 time period. There was $7 trillion. It was probably more than that. At least $7 trillion injected into the economy during the health issue that was occurring in that time frame. And that's what we're seeing there. That's $7 trillion feeding into inflation in the economy. I suspect that at the current time, the printing presses are running at an even faster rate than they were back here. That we are just at the start of another 7 trillion, only I suspect it'll be much larger than that, probably 12 or more. It may or may not show up here. Where we're currently seeing this money printing, in my opinion, is in the stock markets. If you look at charts of any of the NASDAQ, S&P 500, Dow, clearly, in my opinion, again, money printing is feeding into the stock markets. And of course, our current president he's big on the stock market. As long as the Dow's at 50,000 or whatever, everything's good. Or they want us to believe that everything is good. Let's see, this U.S. price of diesel. Last time I looked at this chart, I was paying attention to the rising price of gas during Joe Biden's term. And interesting, I was surprised when I opened this chart. Here we are yet again. It will be interesting to see, will this be a peak again, or will the price of diesel, and of course this is a U.S. average price, here in California, Southern California, we've already got a 7 in front of the cost of diesel. That's another sign of the inflation I was alluding to a moment ago, where we're just seeing the start of inflation in food in particular that's not going to feed all the way through the supply chain until late summer, early fall. And one of the factors, primary factors, is the cost of diesel. We can't ship anything without diesel. We can't run tractors to harvest crops. Diesel is everywhere in our economy. This is a look at interest rates. This is the 10-year monthly time frame showing the long term. That we had this 40-year downtrend in interest rates, and this was pretty much across the yield curve. Breakout back in late 21, early 22, and of course rates heading higher from there. That's the big picture. What could be affecting the metals right now is this little surge. If we keep rolling, let's see, that was the 10-year. I don't have a shorter term. We'll drop down to the weekly and we can see. So last week, that was a big surge in the 10-year interest rate. And now we can see this week, that's a doji. That's starting out as a doji candlestick that opened above actually a gap, a little bit of a gap there, suggestive that rates on the 10-year headed higher again. This is the 30-year in the daily time frame, and we can see again that there was Friday's action. This is today's price bar, and big move on Friday. So understandable that rising interest rates are causing concern in the economy. And then also from an investment standpoint, when interest rates are headed higher and there is a belief that they will remain higher, the precious metals become less attractive because they can get a yield. Gold, silver and gold don't pay any yield. And if you can go put your money in what is nominally a safe investment, not in my opinion, but a lot of people believe that U.S. Treasury bonds are a safe investment. More power to them. This is the 30-year interest rate again, just showing that pop. That's this current month. So pop in the long-term interest rates. Why are we seeing inflation? Again, this is another look at the $7 trillion that was injected into the economy back in the 2020-2023 timeframe. Again, my opinion, we're in the midst of another $7+ trillion being injected in the economy. We may or may not see it in the M2 money stock. It may show up in other places. One of the interesting things in this chart is the rate of increase, and that's what we can see with these simple trend lines. We had a rate of increase that was happening back during the 2008 timeframe, and then it steeped. And so after the 2008 financial crisis, coming out of that crisis, they ramped up the money printing, and that's when the line steepened. And then here, this was the health issue, late 2019, going in for the next 3 years. $7 trillion. And again, we see that in the much steeper trend line there. Now this trend line, the latest one that I've drawn, it's currently the same slope as the previous one. We could be seeing the start of a steepening yet again in this M2 money supply chart. This is the dollar. People talk about strength in the dollar. This is the weekly time frame. So we can see, last week the dollar was strong. Let's drop down to the daily time frame. There was a gap higher on Fridays, but that's the strength in the dollar. And the reason I put question marks back on the PowerPoint slide is in the big picture, the dollar's not strong by any means. It's just the strongest of the fiat currencies currently in circulation. That's what I've got to share for today, folks. So we've got a number of factors affecting silver and gold. Silver acting like it wants to be in an uptrend, potentially is in a new uptrend. Gold doing its sideways thing. Really not looking that bad. Talk to you soon, folks.